Good morning, traders. Chris Bess here with Traders Profit Compass with your morning look at markets for Monday, July 26th. It's 6:20 a.m. as I'm starting the video. As always, I think you'll be well served by running the video at 1.25x. That'll increase your efficiency, and I don't think you'll miss a thing. Let's jump in. Taking a quick look at the futures. Equities are pretty much flat. Although pre-market, I did see that small caps were running pretty strong. They were pretty negative when I sat down at the chair at about 5 o'clock, and they put on about 20 points. So that might be something to watch into the regular session if there's a bid behind small caps. But as far as large caps and tech, they're pretty much flat. Oil's down 0.5%. Nat gas up 0.75%. That trade continues to work. Gold is up 0.5%. Asian had a weak session. China pressure continues to lean on their equity market over there. In fact, there was actually a public statement apparently that from the Chinese government that, yeah, the for-profit I call them diploma mills, education companies, tutoring companies are no longer for profit. They're non-profit companies effective immediately. Also, I didn't realize there's China-U.S. trade talks going on right now, and apparently kind of prickly, not making a ton of progress. But maybe that's all posturing. Maybe it's something real. I'm not sure. But that Asia weakness has flowed into Europe, and that's probably part of why we're mostly flatlining right here. But as we've been talking about at the end of last week, and certainly over the weekend in the Weekend Profit Navigator video, this is a massive week. We've got the confluence of Jay Powell on Wednesday. We've got all the FATMAAN names starting tonight with Tesla, and then tomorrow night with Apple and AMD and what else, Microsoft and Google, and then Wednesday we've got Facebook, and then Thursday we've got Amazon. Plus there's a ton of other marquee names on the list this week, including McDonald's and UPS and Caterpillar, and the list goes on. So ton of important names, and with that obviously comes a lot of risk. So I do think this is a pivotal week, and it could set the tone for the next 6 to 8 weeks, depending on how everything resolves with Powell and the large cap tech stocks. If both of those factors resolve lower, then we may have a tough 6 to 8 weeks ahead of us in front of Jackson Hole at the end of August, and also seasonality in August is not that hot. So this could definitely be a week where we see a shift, and that shift could maintain higher if they buy all this mega cap tech stuff. We're definitely going higher, just because of the weighting in all the stocks. So let's jump in here, starting with TLT, and the reason I want to show this chart is just to drive home that this trend line is my toggle or pivot point for the cyclical trade. If TLT breaks to the downside, that'll be a big signal that rates are rising, and then it has a higher opportunity or probability of being real if TLT loses trend, loses the 200, loses the 50. That's going to be like a super sell signal on TLT, and that will translate to a buy signal on cyclicals. But until then, I'm not interested in trying to front run that or get too cute. Everybody that's kind of done that has been run over. So I want to hold off and be as sure as I can that that rate move higher is for real. And Jay Powell will have a lot to say about that. And then on Thursday, there's a 7-year bond auction that'll have a lot to say about that as well. So moving along to our breadth that we've been watching here, percentage of stocks above the 50. We've driven home to death here lately that the average stock, 60% of stocks are below their 50. And until that breadth can improve, it's going to be a very narrow, fat man-led market where you've got a few names at the top really driving the action while the average stock languishes down here. So I want to see that, and I think most people do want to see this drive higher, but it remains to be seen. I would have thought that coming out of the lows and the rip that we've had over the last, since Tuesday, that this thing only went up 15. I mean, it was at 25 and now it's at 40. That's not a dramatic move. It's certainly not like, this move here where it went from 26 to 85. I mean, we don't need to have that, but could we get over 50? Could we get over 60? That's certainly something that I was looking forward to and didn't really get it. Looking at equal weighted SPY, we're pushing towards the top of this box. The reason I want to look at this is it kind of evens out the Apples and Amazons. Those are just one stock in this weighting regime. And if we can get a breakout here above 152, that would be really nice technically, because then our measured move would be 158. So you may want to set an alarm there on equal weighted SPY at 152. And if you get that thing to trigger, that would be a good sign that some market breadth is returning to the market, and then you've got a breakout there to shoot against 152. Now, quickly going through SPY, we went over this weekend, but for those of you that didn't catch the video, well, I still recommend that you go back and look at that weekend profit navigator that was posted yesterday. There's a lot of, I made an effort to tie in some macro stuff with the COVID variant, with some supporting documentation about how, at least in my opinion, to fade COVID fears. Got a lot of other information in there. I think it's worth your time to go take a look at that. But on SPY, we've recaptured the 8 and 21 day as we discussed. We've recaptured the bottom of the trend line. We're at all-time highs. All-time highs you got to buy, but it does not come without some bearish divergence here where we're at the highs, but from a momentum and RSI perspective, we're at lower levels. So that's always a yellow flag. So for you swing traders and traders on the daily time frame, the setup is relatively simple. Stay long against 437.50 here at the prior high. And if we, were to go up or tread water for a couple days, and then those big names report or Jay Powell has something to say, and we drop back but down below, then that would be cautionary, a time to get tactically defensive and see, where support ends up. So this is a pretty tight long right here. There's not a lot of downside before we would get a heads up to say, hey, you know what? It should have held that prior high if everything was okay. And if it can't hold that on any kind of wobble, then we've got to get a little bit more defensive, because once you can't lose a lot until you lose a little. There can't be a disaster until there's a storm. And the first hint of something in the horizon that might turn out to be something sinister would be breaking back below the all-time high and then getting into the 8-day and the 20-day. Then we would be back in a scenario like last Monday. Moving on to the 2-hour, it's more the same. we have broken out of this nice uptrend channel, just like we did here. And so remember our technical analysis tenets. Once you break out of a well-defined range, you want to stay above. So tactically speaking, we want to stay above this trend line, because as you see over here, we had done the same thing. We had broken out. But then once we came back inside, your first target's going to be the midpoint, and your second target's going to be the bottom of the channel. And certainly we had a heads up on that. And I don't think, well, I'd like to think that not a lot of us got caught on that, because we saw that. And we're going to see it here if and when it happens. So we're above right now. If we were to drop back into this channel, the first target would be back at 434. And then if things, like I say, get a little bit more sinister, you could come back in here to the 428s and 429s. So keep that on the radar. SPY 30-minute chart. We had a gap on Friday. We drove up here. I put a little support ledge here at 439. There's not a ton there, but we have started building a little layer here at 439. That would be your first support. And then I think you're back here at the prior high at 437.50, 437.75 is going to be a more substantial level of support. Then you break that, and then you're down into this filling of this gap. So I think 439, 437.50 are your key levels on SPY. Qs, beautiful uptrend, no problem at all. We recaptured the 20 and the 8-day. The midpoint of the channel acted as support here along with the 20 EMA, and we bounced off of that. Now we've gone to all-time highs. The door is open for a move to 380, 385. We've got some bearish divergence here at this high. We are at this momentum level and this RSI level, but now at the all-time highs, we're slightly less. So that's a yellow flag. And like I say, my base case on the Qs over the next 2 days is bullish. I'm not even considering Tesla. I think it's its own thing. So I don't think that's going to be a massive, I mean, if it's green, great. If it's, red, I don't think it's going to pull down Apple. Let's put it that way. So we could be green to higher into the Tuesday aftermarket close prints. Give us another high, marginal high, and then if they sell it, a potential red bar to come back into this midpoint of the channel, and then that would kind of confirm these bearish divergences, and then we've got to sit taller in our chair. So again, my strategy is to see if I can get some upside over the next 2 sessions, be mostly out and be mostly defensive heading into J-Powell and heading into these mega cap earnings, and so as just to protect what we've got, what we've gained over the last 2 to 3 weeks, and not to go out and try and be a hero with these earnings, because you are just throwing a dart, and that's not great odds. So on the 2-hour chart, I've just dropped in some levels. I think here at 367, you've got a little level. I have dropped in a little trend line here. It's not God's gift to trend lines. There's only a couple touches, and that doesn't really make it valid. But what you might see is a push into this level and then a hesitation or a back off. So it's just there for reference. But even on this time frame, all the moving averages are pointed up. and bullishly configured. There's nothing on here that is scary or leads me to believe get out. So I think you're okay long. Just watch the price action over today and the next, into tomorrow, and then we can make our adjustments heading into the Fat Man earnings. A few days ago, I hypothesized that this might be a bull flag, and look what happened. We had the impulsive move off the floor. We had a consolidation. We had a measured move on the bull flag, and we met it and even exceeded it. So that was nice to have that as a reference point. So for today, we've got the all-time highs just above from the highs from Friday. And then we've got a little layer here at 367, I think would be your first support. And then you've got more substantial support at these prior highs here at, let's call it 365.75, right in there. And so those are your active pivots here this morning. IWM we've beaten to death as well. I'm not interested in any kind of swing or duration long on IWM unless it can clear 222.50 and even possibly the 50 at 223.50. And then once that happens, you would probably see that TLT pivot trigger. You would probably see all the alarms that we've talked about on XLE and XLI and XLF and KRE, all the cyclical sectors, materials. You would probably see all them fire as well. And then that would be more of a green light for cyclicals if and when this can break out. I think down here, it remains vulnerable to the downside. And with Powell and that 7-year bond auction right around the corner, I would view anything that happened today or tomorrow as a potential head fake. I think there's going to be plenty of money to be made in cyclicals when we get the real signal and one we can truly believe in. But no, I'm not going to get in. I'm not going to do a regime shift 24 hours before Powell talks and can blow the whole thing up, or that 7-year bond auction driven off of Powell where no one shows up and then the rates go crazy. So I think this is a good week to watch, listen, and learn, especially on small caps that have not proven they can do it. Fail. That's not proven you can do it. So I want to see price prove it can take out the midpoint of this range. And then, if I want to tactically get long against 220 and look for a $2 move this afternoon or tomorrow, that's fine. I'm talking about duration trade, going out a month or 6 weeks and getting a bunch of individual cyclical names. I don't want to do that. So here on active trading, you've got a pivot here at 220. I think on a break above, you can see 222.5, and then you've got the 50 here at 223.5. That'll pose a little resistance. And then here it is, just zoomed in on the 30. You can see these the pivot and the resistance levels pretty clearly. And if this rolls over the next couple days, probably going to come back down here to back test this low down here at the bottom of the big box on the daily chart. Let's move into Facebook and the rest of the Fat Man group. Massive spike on Friday. Left a big gap behind. Actually, I don't have that drawn right. It's actually down here. I marked it on this candle. You can see that it reached down. So the gap is a little smaller, and I'll adjust that. But it looks like it's down here towards 357.50. So I'll adjust that. But two big impulsive bars. What I would not be surprised about is if this forms a bull flag. So here's your impulsive move. Spend some time consolidating, get a catalyst at earnings, and then make a pop towards 400 if that's what it's going to do. Here for active trading today, you want to see it hold 367.50, the bottom of this range here. And if you lose that, there's not going to be a lot stopping it to come back to this gap and back to this trend line. So I would key off at 367.50 if you want to actively trade Facebook. Apple has formed this tight wedge heading into earnings on Tuesday night. I think the key here is just hold 147.50. And if you want to look for an upside objective, if heading into earnings or today, you get a break above 150, I think you can buy that just for short-term active trader stuff. That was the prior high. All-time highs you got to buy. And if FOMO gets involved, maybe they run it to 152 or 153 into earnings, and that's when you pull the ripcord and get the F out before the print. So I would key off of this 150 level for a long idea, and for a buy the dip, I would buy a back test into 147.50. I think those are the key levels. Tesla not feeling it. I mean, it may do whatever it's going to do today, but it's got to get over this 655, 657.50 type pivot and above this uptrend line to really, from a technical standpoint, open the door to the 670 and 690 numbers that we've been looking at for quite a while. You can see that after the initial ramp, it's been soggy. Series of lower highs. We did have the double bottom, and now we've got a higher low here, but this line of lower highs has not been able to been taken out yet. And with price below resistance and below the trend line, that makes it a hard long for me. Now, if it came back down here to 625 and held, then you got a chance for a bounce. If it lost 625, then back into 595. But that's probably going to be event driven with earnings after the bell. So I wouldn't really expect that today unless news kind of leaks out. It's either a great report or a disaster. Let's look at Microsoft. Another bull flag situation. We had said get long here at 280 at the pivot. We got a double upgrade on Thursday, built out a flag, then had the next leg higher. We're here at 290. Let me show you where we're at on the daily. So, sorry about that. We've blown out the top of the channel here at 285, and now we're running all-time highs. No natural sellers. We got earnings Tuesday night after the bell, so those same kind of comments that I made on a SPY, where we've broken the top of the channel, we don't want to come back in. We want to stay above, consolidate, do whatever it's going to do, but stay above that channel, because if you were to roll over and then drop below, your target would be the midpoint back here towards 275 and potentially come all the way back to 260. Now, on these earnings, one person's disaster is another person's opportunity. What do I mean by that? So you get out. You know, we've participated in a lot of this move right here. And so we get out prior to earnings because we don't know what happens. And there's some kind of corrective action. I want you to take note that this was the breakout here at 260, 262, right here. Prior high, we broke out. We have not back tested that breakout. We've gone straight up with very little retracement. It hesitated here at the top of the channel, but we have not come back to back test that at the bottom of the channel like we've done in all these other occurrences. Top, bottom, top, bottom, top. We've not come back to the bottom. So if you're sitting there not in, and they pull the rug over the next couple of weeks and bring price all the way back into 260, that's when you take out the bazooka and you go long with a tight stop below, because you'd be at the bottom of a long-standing rising channel. You will have back tested the breakout, and that's a high probability trade right there. So while anybody that held into earnings would be crying, you'd be licking your chops down here at 260 to buy the back test and then assume the trend will continue. Amazon grinding higher. Earnings Thursday night. You've got a pivot here at 36.70. You break above that, then you're going up towards 37.10, and then potentially even 37.60 here at the prior high. So this one is pretty cut and dried, pretty clear. And I want to show you something on this as well. That 35.52, 35.54 number, breakout back test. Breakout back test, go. That's classic technical action. And that was the action that I was just describing that could potentially happen on Microsoft. Here we got the big breakout. It's going to 4,000. Whoops, they came back and back tested this big breakout, and that gave anybody that was interested a second bite at Amazon to get a tight long against this 35.50 area. And you know, keep in mind, when you got a $3,500 stock, there's not much difference between 35.50, 35.52, and 35.54. So don't be like freaking out like, you know, oh my God, it undercut by $1. You know, it's a sell. It doesn't really work that way on such a large magnitude stock. So here we got the bounce. And so now it's all about how it behaves ahead of earnings. If it can take out this high, then it'll be off to the races to 4,000. Netflix found some stability down here at 508. And now it is recaptured 515. So just from a technical standpoint, if you want to be involved in Netflix, you can be long against 515 and see if it grinds higher back up into this range. And all these resistance levels will still be in place. Your first target is 522.5, and then really $10 increments all the way up. And you can see that those levels were respected in this prior trading. So if it does an upward trajectory, these levels will still be your overhead resistance. And so now Google, I mean, great day on Friday, 3.5%, $100 move, $90 move, got a gap up. I wouldn't be surprised if we see some type of a flag formation here over the next day or two prior to earnings, where it just kind of settles in and see what happens. So I would just, I mean, your pivot is right where it closed, 26.60. If it goes higher and runs into earnings, you can use that as your pivot. If it, you know, wobbles or sells off, then you can be short below. But That one's pretty clear. 2660 is your pivot. And now just a couple more charts. SMH I've been watching really closely. It's a risk on, risk off asset class. We took the plunge, we got it all back, and now we're threatening that 258 level that was so key on the daily chart. Why? Because of this big $35 consolidation range. We break out above 258, and then our scenario of a breakout and measured move towards 295 would be back on the table again. So I'm watching 258 very carefully over the next couple of days. And you can see here, if you're trying to actively trade it, 258, 260, and then 262 are levels that I have for overhead resistance. I'm in AMD, been kind of riding this channel up. It too has earnings Tuesday night after the bell. So I'm obviously hoping that they drive it up towards 93 and maybe pop out. I think 95 might be a stretch, but if FOMO gets involved, you never know. And then I'll be out. I will be out of that trade before Tuesday after the bell. And just to give you a little flavor for how I traded this, that I had gotten some long calls here, like 87s and a half, and then I rolled up to 89. Was it 89 or 89? No, it was 90s. I'm sorry. It was 90s, and then all for July 30th. Then on Friday, I rolled up, when I got this move, I rolled up to 93s for July 30th. So I'm in July, July 30th is the end of this week, but I'll be out. So that's what I mean by roll and protect. Every time you find yourself in the money and you've got, a decent gain, I usually take that to the bank, then I roll up to even money, then I just see if this thing keeps rolling, because one bad day on a weekly option can really hurt. So when I'm trading those, I try to stay pretty active and keep rolling up as long as the trend stays intact. And then a new position on Friday was, we had talked about these bracket trades where Wednesday night, Texas Instruments got the rug pulled. That's the big gap down. Thursday, spent time consolidating. I alarmed the bracket. I got an alarm here, and then I got long. So I'm in August 87 and a half. I was a little late. I did not get it right, right where I should have, or I'd have been, a lot farther in the money. But it looks like it's heading in the right direction. So I'm in 187 and a half for August, and my stop is back at the bottom of the gap. If it comes back down in here, I'll be out. So anyways, that's what I got for today. If you want to have something to look forward to, I think I'm going to do a separate video on the FATMAAN names before earnings, and that means before Tuesday night. I'm not going to try and rush it because of Tesla, because like I said, I think that's its own thing. But just keys for the week. Watch those earnings. Watch Powell. Don't try to be a hero. Be smart. It's okay to try to take a shot, but make it a reasonable shot. I think it's about as close to a lottery as you're going to get when you got Powell and these names converging together, and with a bond market that's flaky. So have your alarm set, be ready to go. If you're new to the channel, I hope you like the presentation and getting the levels and some perspective on the market. Hit the subscribe button and the alarm bell. That would really help me. Ditto for longtime listeners. Thank you for the support. hit the like button, leave me a comment. I've been getting a lot of nice comments lately, and I really appreciate that. Also, if you're new, jump over to the show notes. There's a place to register for all my content. It's just asking for your email address, and it takes 5 seconds, and then you'll get all my content, intraday notes, and stuff over the weekend, and stuff at 11 o'clock at night. You won't have to look for it on social media. I am on this about as closely as anybody, and I'm not saying I'm always right, but I will pass along what I see, and I think it'll help you in your trading. So have a good day. This has been Chris Buss with Traders Profit Compass. Talk to you next time.